What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and we are seeing breakouts in gold, in silver, in miners, and a breakdown in the dollar. So we're going to dive into that, see what's going on here. Is this a head fake, or is this the start of a larger move upwards? Ready? Let's dive in. So the most notable move over the last couple of days has obviously been Bitcoin. As I record this, Bitcoin is just over $23,000. Now, there's a couple of things going on here. Number one, we had that consolidation while we built some energy underneath that previous all-time high of just under $20,000. We shook out some weak hands. There was some profit taking or some selling of people who were just saying, hey, I bought at the top at 2017. Now I want to get out. That caused some selling pressure, and then that reinforces that cycle every time it gets back up there. You have some selling until it finally breaks through, and support and resistance is kind of like, you can think of it like floors and ceilings in a building. Every time you break past a previous ceiling, that you're now on the next floor, that's now your floor. And so that's kind of how support and resistance works in markets. And so it looks like number one, we have had a strong breakout here, and number two, what you normally see is another sell-off at some point to retest that old support. Doesn't always happen, but a lot of times it does. And so usually there's this strong breakthrough and then a slow sell-off to retest, make sure that that's a good level, and then it'll continue on its rally from there. Now, I know that there are a lot of different views on Bitcoin and a lot of channels and a lot of people who know a lot more about it than I do, but my general outlook on it is that we'll probably see Bitcoin hit somewhere around 250,000 by the end of next year. And this is the first time I've given a massive target like this, and I'm going to come out with a new video soon on my 2021 targets for all assets. But generally, I'm expecting that a number of factors are working into that projection, and so I'm not anticipating that this price rise in Bitcoin slows down significantly. I expect it to accelerate and us to see some sort of another bubble dynamic happen, a repeat of the 2017 type of dynamic where we see a massive, unbelievable skyrocket bubble followed by some sort of a sell-off. Now, a lot of people recently, if you look at a short-term time frame, are looking at the dollar, specifically the dollar index DXY, and they're comparing that to the price action of Bitcoin and saying, hey, looks like there's a correlation here. As the dollar goes down, Bitcoin goes up. That's coincidental. If you look longer term, there is no correlation between the dollar and Bitcoin, simply because there is no fundamental correlation there. The dollar index is the dollar versus other currencies, and it's not weighted against Bitcoin. And so if you look at the dollar index and then look at something like the euro, you're going to see a lot of correlation there, obviously. Inverse correlation. You're not going to find that long term with Bitcoin. And so the recent drop in the dollar might have a little bit to do with the recent skyrocketing price of Bitcoin, but it doesn't have that much to do with it. The main driver behind Bitcoin is institutional adoption and big money starting to allocate treasury assets to Bitcoin. More of what you're seeing is dumping bonds and government treasuries, sovereign debt, in order to get Bitcoin. And the reason why you're not seeing a corresponding sell-off in bonds, a corresponding sell-off in these debt assets, is simply because you've got another buyer who's willing to buy them at any price, and that buyer has a money printer in order to buy these debt assets, and that buyer is the Federal Reserve. And so you're not going to see a corresponding drop in debt assets as you see more and more of that money from the institutional side get allocated into Bitcoin. Now, some more misinformation that I want to correct here is that a lot of people have been saying that Bitcoin has been rising because people have been selling gold and buying Bitcoin in its place. That is simply not true. If you look at the total market cap of gold, somewhere around 7 trillion. We don't know exactly how much gold there is, but it's going to be somewhere around 7 trillion. So when you look at the top of gold in August, I believe it was August 6th, and then you look at the bottom of gold, from there, that was around November 30th, I believe. If you look at that sell-off, that represented about $1 trillion of market cap. If you look at the total amount of gold there is and the price, the total market cap of gold decreased by about somewhere around $1 trillion there. Again, rough estimate. If you look at the exact same time frame, the amount of market cap that Bitcoin gained by in that period, it was roughly 150 billion. And so maybe at most 10% of the money that came out of gold went into Bitcoin. And that would be a large estimation. Likely it's much less than that. And so the message that, selling gold is driving Bitcoin higher is just not true. You don't see anywhere near the amount of capital coming out of gold going into Bitcoin. Now, it looks like the bottom for gold and silver and miners was finally in back a couple of weeks ago. We've had a rebound off that bottom there. And if you look, you can see it looks like we're starting to break out. And so time will tell, but it looks like we are starting to see the beginning of the new rally. You know, we've had a couple months consolidation, couple months sell-off in gold and silver and the miners. The fundamentals, the macroeconomic environment for gold, silver, and miners is just unbelievable at this point. When you look at the supply-demand dynamics for silver, fantastic. When you look at the net short positions on gold futures on paper gold right now, it is extremely bullish for gold. There's virtually no selling capacity available in gold right now. It's very, very leaning heavily towards the only capacity there is to close out trades is to close out shorts, which is buying, which will drive this much higher. And I've said this before, but the last time we had a short squeeze like this where the gold trading desks had to close out the same amount of net shorts that they have right now, gold went up about 30% in just a couple of months. And so if we start to get the squeeze here, the bullion banks start to close out their shorts, we could easily see gold hit $2,200, $2,300 per ounce within the span of just a couple of months. Now, if you remember, my original price target for the end of this year for gold was $2,500. Looks like that call was a little bit early. I'm still anticipating that that will get hit very soon here. Once we start to cross this threshold and get into this short squeeze, we could see a massive pop. And again, big rally followed by big drops. Gold is volatile. That's not a negative in my opinion. For the dollar, we've seen a break below 90 for the first time since April of 2018. And so we're down below 90 again. And my price targets for the end of this year are 88 for the dollar index. And so I do anticipate that the dollar continues to move lower versus other currencies through the end of the year. I still anticipate that we'll probably hit 88 close to the end of this year. Speaking of price targets, if we look at the S&P 500, dollar denominated asset prices are generally going to be boosted by a falling dollar. And so we're seeing that in stocks right now as well. And so if you look at stocks, we're above 3,700. My price target for the end of the year for the S&P 500 was 3,800. So I'm still anticipating we'll hit that by the end of the year. Now, what I anticipate to happen over the next year, like I said, I'm going to go more into detail on this in a future video, but I do expect to see some FOMO rallies, some massive fear of missing out, some greed, euphoria to start entering into pretty much every area of the market next year. With stocks right now, you can hedge with puts. Puts are relatively cheap historically right now on stocks. With gold right now and silver and Bitcoin, quite frankly, it looks like the upside is far greater than the potential downside, right? You could lose 100% of what you put in. Looks like over the next few years, you stand to gain a lot more than that. You know the drill, none of this is advice. It's meant for informational and educational purposes only. If you want to get started with trading options, buying gold, buying silver, buying Bitcoin, buying real estate, and you don't know where to start, I've got all of my favorite resources, my guides, my courses linked in the description below. As always, I really appreciate you guys. You're the best. Have a great day.